Most wills work, but sometimes a will can be drafted that accurately captures the testator's intentions, but the legacies as they're drafted have unintended tax consequences. Here are two examples of what can go wrong. Spreading. An estate may contain qualifying relevant business or agricultural property, whereby the value for inheritance tax purposes can be reduced by as much as 100%. These inheritance tax exemptions are called business property relief and agricultural property relief. Examples of relevant business property include shares in an unlisted trading company, an interest in a partnership, or a sole trade. AIM shares have become a popular investment for inheritance tax mitigation because they fall within the definition of an unlisted trading company. A farm is an example of relevant agricultural property, so there is an assumption that business property relief attaches to relevant business property, and agricultural property relief attaches to relevant agricultural property, which makes sense, but unfortunately this only applies where the relevant business or agricultural property is of a specific gift. If the relevant business or agricultural property passes via the residue, the business or agricultural property relief attaching to the qualifying asset must be spread across the whole estate. This means that the relief is apportioned between the specific gifts and the residuary gifts. Spreading very often results in an increased inheritance tax liability if there's one or more specific gifts to an exempt beneficiary, such as a spouse or a charity. Ademption. The Wills Act 1937 states that a will shall be construed to speak and take effect as if it has been executed immediately before the death of a testator, unless a contrary intention appears in the will. The courts have construed that the wording used to distinguish a specific gift as showing such a contrary intention. The effect of including a description such as my piano when making a provision in a will is that if the piano is replaced after the execution of the will, the gift is invalid because the original piano is regarded as no longer being owned by the testator. This revocation of a legacy is called ademption. Ademption can take place without any action on the part of the testator, such as when a company the testator owns shares in chooses to restructure and there's a significant change to the rights or value attached to the shares. Where redemption applies, the expectant beneficiary receives nothing and the assets pass to the residuary beneficiaries. Such failures, as you can imagine, can result in fractured family relationships and deep emotional wounds. So a lot can change in a person's life between the execution of their will and their death. It is therefore important that the will be reviewed so that it can continue to communicate the testator's intentions, and also so that it won't be remembered by their family for leaving a contentious legacy. Please contact me if you'd like me to review your will and advise on the tax implications of the legacies as they're drafted. Thank you.